Hello, everyone. I'm James Withall, CEO of Rupert Resources. Thanks for taking time to view this webcast. Going to run through the presentation with you this morning, take about half an hour, and then I'm sure Tim's got some Q&A for me. I'm sure many of you know the story, or if you don't know the story, you might have heard that about exploration in Finland and some of the exciting things that have been happening there over the last few years. Certainly, that's what we've been focused on, Rupert Resources. We came to Finland in 2016 and acquired the part of our mine and mill initially for just a small amount of money from the administrators. But what came from that, and what I'm going to talk about today, is really the land package and all the exploration upside, and obviously the discoveries that we've made as a company. So you'll find this interesting. It's a cautionary statement. Please refer to this. There's quite a lot of forward-looking statements in this presentation today. So look, we set out really at the get-go to make a discovery of significance. Ultimately, I spent 13 years prior to my time at Rupert Resources in the fund management side, in specialist natural resource equities fund management, both long-only hedge funds as well, and absolute return funds. And a lot of that was actually in the gold sector too. And prior to that, my background, I was an exploration geologist for 8 years working in Western Australia, right in the early stages. I guess similar to what we're doing now in some of the companies I worked for then. But what really drives value in the industry and what ultimately delivers returns for shareholders has always been really high quality discoveries. And I guess, how do you define one of those? Ultimately, it's a deposit, be it gold or another metal, that has the potential to make returns throughout all the cycles. Obviously, you do get cycles in the metals markets, but it's about having the opportunity to make exceptional returns through that. And to do that, you have to have a high quality deposit in terms of it's for something like Ikkari. It's a very cohesive deposit. It's a far higher grade than most gold deposits compared to that side, and it has very low sensitivity to cut off of the deposit. So it's really about its shape and size and its grade. If you're looking at mineral deposits, that's what the differentiator is. And so we discovered this Ikkari project in early 2020, but that wasn't the first discovery we've made. This is a brand new grassroots discovery in a new area of Finland, and it was actually our sixth discovery that we've made through that process, through our exploration process. And we continue to make more discoveries. I'm going to talk to you a bit about that, because that's really how you continue to generate more value for shareholders and investors, but also for all the stakeholders involved, because you're just building a bigger and potentially a lot more successful business as well. So we say with significant value remains. Yes, absolutely. Currently, we've just finished drilling the Ikkari deposit for the PFS. So our target was to have 4 million ounces in reserves. So there's currently about 100,000 meters of drilling into Ikkari, but really it's still one thing to remember and to take away is it's still very early stages of this belt. We have done a PEA, so there's some economics out there, so you can see what the potential cash flows could be from this project. It's in a great location. That's the other key thing to take away from today. Northern Finland is an established mining area. You've got Europe's currently largest gold operation, Ikkari, owned by Agnico Eagle. You've got one of the biggest base metals in Europe, Kevitsa, owned by Boliden. So it's a very established area, and Finland has a fantastic rule of law and a strong mining law. So it's a good place as a company like ours with some great people to establish and grow a new opportunity. So just some highlights from the PEA, just to remind people, if you've seen the numbers that came out November last year. The NPV of the project's in the order of $1.6 billion US. That was at $1,650 gold. But the NPV is one thing, but it's really about, again, the quality, and that's really shown in the IRR, very high IRR, 46%. In fact, you get payback on the capital for this project within a couple of years. And what's driving that? Well, it's in the lowest quartile of the cost base of the industry. So you're in the order of, all-in sustaining costs in the first 11 years of this project at the PEA stage, we're under $600 an ounce. So if you look at the industry today, I'd say the median all-in sustaining cost is well through $1,000 an ounce. So significantly below the cost of other businesses. So the resource base, just focusing on that, currently we have total just over 5 million ounces of resources defined within our Finland business in the company. Obviously, a lot of those are at Ikkari. I guess the key thing to take away is that indicated total, so a higher level of confidence. That's up at 2.5 grams, and it's almost 3.9 million ounces. So that's a pretty significant number for a company of our stage. And I guess before I get into the details of the project, I just wanted to step back a bit and about the gold industry. And if you've been following, there haven't actually been a lot of significant discoveries in the last 10 years. And we consider that Ikkari, is one of those major discoveries of this exploration cycle. This chart just takes you back through time and looks at discoveries over the last 50 years. And really, if you just going to use a highlighter here, if you look at this last period on the chart here, you really have you have a few discoveries, maybe the Swan Zone Fosterville, which was in Kotiaho Lake and now in Agnico, ironically. The Dixie discovery for Great Bear, obviously that was a very successful discovery. However, what's common to both those projects is they were drill holes. It's not as though they were grassroots discoveries. Ikkari is actually, is a completely grassroots discovery. There was nothing here before Ikkari, or no real exploration of consequence before there, no drill holes, etc. So the true unknown. So I think this industry as a whole is struggling to replace its reserves. Certainly struggling to replace it with quality gold reserves that can be mined in the future. The other aspect about discoveries is that people always ask us, so is it going to get bigger? Is it going to get bigger? That's a good question, and obviously an important question for investors. But I think this chart done by Minix is pretty informative on that. And this just looks at 60 significant gold deposits, each over 1 million ounces in size, that were discovered. And so along the bottom here is the years after discovery. So if you take time zero for us, effectively being March 2020, we quite quickly, within the first year, had a sense of what the size could be. It was in the order of 3.5 to 4 million ounces. And so that came together relatively quickly within a couple of years. But for a typical gold deposit of the sort of system that you see at Ikkari, over time, these discoveries will change over time. There's many mines that were meant to have closed many years ago. But if you look at that over the next 15 years, you're probably only seeing potentially about 40% of the potential ounces that could be coming from this deposit. So it gives you a measure of, if we stay with our disciplined approach and we carry on exploring and understanding this deposit, what the potential, just in terms of unlocking that value, will be over the years ahead. So in terms of a business plan, how does that come together? Well, exploration is about allocating money very systematically and in a very disciplined manner. And we've been very successful at that. It's cost us about $11 a resource ounce to discover the Ikkari deposit. The PEA defines those resource ounces as being worth on a discounted cash flow basis of just under $400 an ounce. I think the market today is valuing Rupert at about maybe $120 an ounce. So if we didn't find another ounce today, there is an opportunity for us to demonstrate the increased value of those ounces over time as we bring them into production. I think the real win and the real thing that changes the economics and changes the valuation of the company going forward is our ability to continue to grow the deposit, as in with the previous slide, but also make new discoveries as well. So it's still relatively new in terms of the discovery process. So I think we're still outside of the Ikkari deposit. We've really only drilled quite shallow levels, less than 150 meters. So I guess we see this as very early stage. So this is a map view of the Ikkari project, which sits on the south side of this image, and this is the half a dozen discoveries that we made in the process of discovering Ikkari. So we do have other potential satellites that are coming together. Haina Central, which was in the last resource statement, Haina South. We've had some very exciting results from Ikkari North last summer, and we're following up on those now. But the one key takeaway from this image, if you don't take anything else, is all the black lines are drill holes. But the reality is there's still a huge amount of open space, and that doesn't mean geologically there'll be anything there. But it just is another expression of how this is quite early on in the phase of exploration here. So I'd imagine if you look at this map next year, after we had another winter of exploration around Ikkari and our geological knowledge has got better, there'll be a lot more drill holes, and hopefully a lot more drill holes with significant intercepts in it. And one of the challenges, or I guess you could say a measure of success, is that over 75% of all the holes we've done in this image here have what we describe as gold mineralization of significance, things that we should follow up on. So we're not short of potential targets and potential opportunity here. So now getting back into Ikkari and just trying to understand that. This is some images from the press releases that we've done recently. The resource block model in the background is the resource that was used in the PEA. So you'll see that's the image in the background here. The dashed blue line is the outline on this cross section of where the indicated resource was, and all the coloured dots on here are all intercepts post the resource that was done for the PEA. So we've added about another 30,000 meters of drilling to the Ikkari deposit since then. What was the aim of that? I guess what on the left-hand side of the chart here to explain this is a chart of ounces per vertical meter. So the true measure of a mineral deposit is the amount of metal in every vertical meter going down, and how, as I said, the shape, that's constrained. Ikkari is very unique because doesn't have a relatively large footprint, but it has a huge amount of ounces per vertical meter. The average, a really good gold deposit in the industry might have maybe 5,000 ounces per vertical meter. Ikkari in some places has between 10 and 15,000 ounces of vertical meter in these zones here. So that's what drives those exceptional returns. That's what drives the high IRR, the quick payback. And our aim of the drilling, as you can see, there's quite a lot of drilling in this lower area this past winter, is to add more ounce in here, obviously just to increase the drill meters in this area of the chart here. And we continue to add drilling. Even today, we're still trying to target further down, deeper, but we're getting down to, this is already 600 meters below surface, 800 meters at the bottom of the image. So a lot of the drilling in the future may well be underground to look at extensions to Ikkari. The obvious extensions right now to Ikkari are certainly in this western side, this western plunge zone going up the west. The depth remains completely open, and there's also an eastern plunge zone that's going on as well. So certainly plenty more even at Ikkari to looking at. This is just a cross section, just again example. This is one of the more recent holes we've done this year, and again the blocks in the background of the original block model, and you can see a number of these holes actually sit outside the block model. So again, people always ask us, is Ikkari, have we seen all that's going to be seen? Simply put, in these geological systems that create deposits like Ikkari, there will be more to be found. It's just a case of time, drilling, and geological knowledge progressing. So just getting back to the PEA, some summaries of the project. Currently that defines a 22-year life project. Mill throughput 3.5 million tonnes per annum, so not a huge operation, but in terms of the grade, it produces over 200,000 ounces a year. It's a very, very low cost. In terms of the real economics, just back to highlighting those, I guess some of the key figures I'd say are on this left-hand side. The capex initially 400 million. There will be more capex required as you run the operation, so taking that total up to just around 800 million. But the project generates revenue at 1650 of just short of $7 billion US. Its operating costs in the order of $2.8 billion. So it has free after-tax cash flow generation of potentially $2.7 billion. So discount that today, that's why you get to the 1.6. But it's it's a very high cash generative project. Some more detail on the cost figures. Feel free to refer to the spreadsheets. The presentation online really has got more detail on this, but I guess it's there was a pretty thorough PEA. Obviously, we're now just beginning to get in the process of doing the PFS, preliminary feasibility study, which will be based on reserves, and that will refine these. Sensitivities, I guess a lot of people will say, okay, well, what does it look like at today's gold price or higher? Well, obviously, if you take it up to today's gold price and use the same discount rate of 5%, you'll an NPV potentially of well through $2 billion. The IRR stays, just goes higher. But I think more importantly is what's the sensitivity to the downside. And even at $1,300, it has a very high ROI, and that's all driven by that low cost base. It's not that sensitive to capital, and it's not that sensitive to operating costs, but that's really just because you're within the range that we're showing here. The margins aren't, I mean, they're impacted, but they're not impacted to the point where it becomes economic. So this just gives you an image of the profile of the life of the operation, the amount of ounce it produces, over 200,000 here, this line through the middle. We have this dip in the middle. People obviously asked us about that. So why is that there? That's really about sequencing of the open pit and sequencing of how the operation evolves from being an open pit operation to an underground operation. So again, these things will be readdressed in the PFS, and we hope to smooth that out and hopefully improve that. But at the moment, this was actually done on a resource that is now a year old, or just over a year old in terms of drilling. So look, it's by the time we come out with our PFS in the early part of next year, there'll be a lot more information in the refinement of this. But you can't take away from what this graph shows, which is the free cash flow generation of the project. So even when you're investing significantly in developing an underground operation, the project is free cash flow positive, and not just in a small way. We're generating almost $100 million of free cash flow, even in the down period caused like that trough. But in terms of the cash flow generation compared to the ounce produced, you can put this profile up against operations that might produce 350, even 400,000 ounces, and it has a comparable cash flow operation profile. People sometimes get very fixated by the amount of ounces it produces every year, and for sure that's leveraged to the gold price. But ultimately, that leverage to the gold price only exists if you've got very low costs. So that's the main takeaway from that. And then just getting back to that cost, where does it sit on the cost curve of the industry? Right at the bottom left-hand end, exceptionally low compared to the peer group and the main producers today. It's about half of the world's gold industry presented on the chart. And then other key factors, ratio of NPV to CapEx, really good measures for investors. Obviously, if you invest in a project that you spend $500 million developing it, but your NPV is only $500 million, so you get into the 1-to-1 times. Well, it's not a particularly exciting return. You could say it's leveraged to high gold price, but trust me, the costs will go up at the same rate that gold price goes up. So that's not something that is an attractive investment. So you want to be right here, and Ikkari has a big margin there, 3.5 to 4 times the CapEx. And again, that's expressed in the NPV per ounce produced as well, because you are again right on the far left compared to those, and that is just pure margin. So just a few images of how it looks. This is the open pit here, phase of the project. So it's unique because yes, it's 650 meters long, 700 meters long, but people often say, oh, why isn't there more strike length? Well, I actually quite like the fact there's not a lot of strike length, because short strike length deposits that are wide like this, it means that the strip ratio is lower, the amount of infrastructure you have to put in is lower. So again, comes down to the amount of ounces per vertical meter within a space, and that's what drives the economics. So the strip ratio on this operation, even at the end of the life when we do those big pit cutback, that is still under 4-to-1, which there's plenty of gold deposits with strip ratios of 15 to 20 to 1. There's similar grades to this, so it's again drives the economics of it. Underground, we've currently looked at sub-level caving and long hole open stoping. We'll again look at all this again in the PFS study and decide which is the best way to explore the project. Processing wise, another big positive, and we find out this really early when we do exploration. Once we've drilled a few holes into any exploration target, we do some metallurgy, because there's no point carrying on sometimes it's worth carrying on if the grade is good enough and the margins are good enough, but you really need, the only way you can work out what the potential return on the discovery is if you do metallurgy early on and understand how much of that gold you can recover or copper you can recover. So we had a very strong sense early on, even after the first 3 or 4 drill holes, that this was a non-refractory deposit, very simple metallurgy. A lot of the gold is in free form and it come out by gravity, and the rest of it in a standard processing circuit from the gold stream, so CIL or CIP circuit. And there's another opportunity here to reduce your waste footprint by using flotation to reduce the amount of material that goes into the back end of the circuit, cyanidation circuit, and that creates a smaller portion of that, and the rest of the if you can just remove 90% of the mass, obviously you can easily see what the better economics would be of just having to treat it 10% of that remaining mass, and the rest of that material just being a neutral product that you can put in a waste dump or use for backfill. So the site layout is quite preliminary at the moment. It's quite simple. The open pit here, plant site on this shallow hill here, and the waste facility here, which is a co-disposal facility. It's drawn in quite almost not cartoonish, but there's certainly a schematic plan here, because this would incorporate any mine waste from the plant operations, and any tailings as well, all in this co-disposal facility. And that's something we're looking to design. Well, we are designing at the moment, and we're really trying to see what is the best way and the most future fit way to manage mine waste. And one of the best ways to do that is actually remove the water and create basically a co-disposal. So you effectively put all the rock back together in a way that it doesn't become a long-term hazard for the environment as well. So we're doing a lot of work on that. Another big opportunity for Ikkari and this region of the world is the amount of power availability, which is absolutely key and very topical at the moment, and the cost of that power. So they recently commissioned a large nuclear facility in Finland, and now there is pretty much excess power in the grid. If you're a domestic consumer, sometimes you are getting paid to use electricity at night. So we have a wind farm right next to the Ikkari project, and we have hydro facilities all close to the project, and then we have this new nuclear facility in the region. So there's going to be an excess amount of power in this part of the world. That should manage to keep the costs to a level. But what's most important is that we see the opportunity to make this actually a zero CO2 emission gold project, which there are a handful of those that get right to the bottom of the CO2 per ounce produced curve. And they all have a similar thing in common. They have the advantage of having a power infrastructure that in itself does not consume CO2. So not produce CO2, sorry. So just a bit of a timeline, probably would have been good to put at the beginning, but just to give you a bit of history here. The project was discovered in 2016. Well, the project was bought in 2016 when Finland was founded. We bought the part of our mine and mill from the administrators of the previous operators. And to be clear, the Ikkari project is separate to that. It's 20 kilometers away in a brand new discovery area. This is the Ikkari area exploration permit. So that was granted a year later. So we grandfathered the application, and that got granted. And then we began a very systematic approach to try and understand what is the best way to explore in Finland. It's an area with very little outcrop. It's quite wet a lot of time. We have snowfall, snow on the ground for sometimes 8 months or 7-8 months of the year, and it's a challenging environment because you don't have any of that surface outcrop, and that's really why you haven't seen a lot of big discoveries in Finland over time, because unless they stick out of the ground, they're quite hard to find. And then so it's a case of using geophysics. We use a specific exploration method where we drill through the till, which can be anywhere between 5 and 40 meters thick, take biochemical samples from that, and that's how we have built up a technique that has been very successful in generating new discoveries. So that's what we were doing in 2019. We did make our first diamond drilling into the Ikkari area based on this methodology in early 2019. I guess right at the end of this sort of getting March, April, that time. And we actually, for our first 3 base turn anomalies, we put one hole into 2 of them, into each 2 of them, and 2 holes into another, and all of those drill holes hit mineralization heading north. The first one and meters at 3.6 grams. So incredible. It just showed that potential for success, and we just built on that and built on that. And so in March 2020 was when we went to the Ikkari area and put our first drill hole into that, 54 meters at 1.5 grams, hole 38. So that was really the start of everything that was coming from there. So within a year later, we'd done our first resource, 49 million tonnes, 2.6 grams, which is under 4 million ounces. And then by the end of 2022, we've done the PEA, put out a new resource. So it's all happened incredibly quickly, and that's all down to the team that we put together and continue to build upon to take this project forward. And so timeline going forward, we expect next year to have the PFS completed. We're well into the permitting process now. In next year is to be able to submit our environmental impact assessment sometime in the summer of 2024, and then ultimately go on to submitting an environmental permit application in 2022. So that's the Ikkari project on the south side. This is Heyman South here. Just look through there, you'll be able to see that the Heyman Central project. This is Heyman North, one of the original discoveries, and this is this Ikkari North area that sits between the two. And there is Senex here. So if I just look at Ikkari itself, and we'll just go to that system. So now you're looking pretty much across the deposit. You can see, obviously, we're just showing the open pit at this point in time. But even from this image, you get a sense that all the gold zones or highlighted zones are all mineralization. So really, it's not as though we've cut off any of the mineralization in any of these directions. Obviously, surrounding all these holes and off to the southwest from here, it is one of the key target areas. But you can see we don't have blank holes. So there's one sitting over here, but that's way away and actually at a different angle. That's going west from here. There's a huge amount of open space still remaining to be drilled and explored beyond the limits of the drilling we've already done. So I often, if you think about Ikkari and where we are today, the major constraint on this is the fact that we just, it's constrained by the amount of work we've done so far. And people say, oh, why don't you have, get 14, 15 drill rigs here and drill like crazy? Well, I personally don't think that's a particularly clever idea, because often when you get 14 or 15 drill rigs, all you end up with is a big backlog of core, a lack of geological understanding going on. And so, yeah, look, at the moment, obviously, it's very broad at the surface. We have those exceptional intercepts, like 100 meters, 150 meters plus of mineralization. At depth, it is certainly narrower than it is, but I guess in terms of gold deposits, there's still these intercepts in the order of, I think this one's 36 meters wide, so it's still a significant intercept. So look, where we're seeing it extend beyond Ikkari zones is in this zone in the west that plunges up this way, and there is no cut off to where it could be. We do believe that there's a geological unit that sits over the top here, which Kalle had talked about on exploration numbers, that sits on the northeastern side, but certainly there's nothing geologically that cuts it off. Just go back to this image on its own. This again, there hasn't been a lot of drilling. We do have evidence of mineralization extending here. Our neighbors, B2 Gold, have made a discovery here, Helmy to the west, and we do expect that mineralization to carry on to some extent. Maybe not in the geologically, we don't feel it. The really large widths that you see at Ikkari at the top, they don't just continue 100 meters wide. That's geology doesn't work like that. So, you have a perfect trap for a huge amount of gold here, but the system certainly extends it. And again, the key is just getting the drill hole meters and carrying on inferring. So look, we've had a significant impact on the local area, just by obviously our investment, the amount of people employed. We're very proud that most of our employees are based in Sedankala. I'm obviously speaking to you from my house in southwest London, but out of that's 32 employees, pretty much 29 of them are based in Sedankala. So we source a lot of our, as much as we can, within the regional area as well. And I think by having a very localized approach and pretty much everyone going and living there, a lot of the guys actually, they've brought their families to the region and stayed there. That's given a huge benefit in terms of people's perception of the company. And we've been doing a huge amount of work on the stakeholder relations side right the way back since in 2016, 2017 when we first came. Just get, really just having an approach where we're just trying to just talk to people, be very open, and say what we're doing, when we're doing it and going through the process that it takes, as you can see, from discovery through to production, it's in the order of 10 years often. So it's you really need to be able to bring everyone along with that path and understand why you're doing it and what the opportunities are. So catalyst going forward, absolutely, Ikkari development, discuss the milestones on that side. September is when we hope to have the next resource out for Ikkari. And then exploration, obviously we're continuing to explore Ikkari at depth, potential extensions to it. And as I said, the exploration right now, even today, is continuing outside of Ikkari, looking to make further discoveries on the package because it's just so early in the geological understanding of this, the potential here. And obviously, we talked about the low emission strategy. We've been very active on land use planning, stakeholder engagement, and then obviously we, due to the nature of the success we've had, we obviously have quite a lot of engagement with people interested, corporate opportunities, and synergies for how best to develop the company going forward. So that's the rundown of the presentation. Obviously, underpinning, I've always had this slide because my investment background is that we have to, everything we do has to have a real continuous focus on value creation. But that value creation isn't just, share price. It's about creating a project that has a huge amount of value and can generate a return and provide a return for all the stakeholders involved. So, it's one part of the process. But I think if we are focused on scale, quality, ensuring that what we do, we're accountable, and we do it systematically and in a sensible manner and an accountable manner, and we're looking about developing something very much with a long-term approach, that's all of those things come together, and our team is bought into that, and that's really what's driving the returns for the company.
Well, thank you for the presentation, James. Now for the Q&A portion, it will be segmented into 3 parts. We will start off with people, capital, and strategy. Here we will discuss important higher level points. This is followed by exploration, where we will form our understanding of Rupert's ability to create value through the drill bit going forward. And then finally, we will look at the development of Ikkari. Here we try to solidify Rupert's ability to create value through driving Ikkari forward toward being a producing gold mine. Let's move into the first segment. I guess you touched on this in the presentation, but maybe you can share a bit more detail on your career prior to Rupert. Just kind of outline your path to getting to Rupert.
Yeah, okay. So I graduated as a geologist in 1995 from Leicester University in applied geology, and then went straight to Australia. Actually, well, a few months later, went to Australia, and basically started off right at the grassroots geotech, working up as an exploration geologist, going all the way through all the different processes that you go through on the discovery phase, the mining phase, worked in gold mining and gold exploration. I spent 8 years there working for a number of different companies. Some of those mines are significant ones. Actually, one of the most memorable ones is Jundee, which is a mine that I was there during the early stage of that. It's now in Northern Star. It's had 3 different owners now. Everyone thought maybe it would go for maybe 10 years. It's still going now. And I think it still has a few million ounces. And it's often an analogy I use for the geological setting and what really is something like Ikkari becomes over time. That had a boundary, had a quite inconvenient permit boundary line somewhere within the project. Ultimately, that got resolved, and look at the project even today. It's still one of the leading assets in Northern Star. So I went through that stage. So I was in Australia through to the early 2000s. I actually then came back to the UK and did a master's at Imperial because I was keen to get into the finance side. I'd been the project manager for the development of a vanadium project, so slightly different out of the gold space, but seen that all the way through from being the exploration manager in the field all the way through to being part of the construction team and into production. So seen all that cycle through in a pretty significant capital investment project as well. So, and then I decided, I'd like to spend more time on the finance side. So I did a master's in an MBA in mining finance, and then and I joined a company called Baker Steel Capital Managers in 2003, and was there till I took the job. I was offered the job in 2017 to join from Rupert, but that was again financial analyst all the way through visiting projects. I probably got, it's a long list of projects around the world, both on the gold side, base metal side, coal assets, all sorts of assets all over the world. So huge exposure to evaluating projects, and doing all the financial evaluation, but all from the first phase. And one of the things that one of my good colleagues there that I worked for a long time there, we used to try and evaluate an entire mine based on a handful of drill results and what could be the potential from that project. From just literally, ideally, possibly from one drill hole, what's the metallurgy, how big could it be, where's it located in space, look at the environmental footprint of it, just all those elements. And it's amazing how early you can really understand whether the project's going to be successful or not. Because, there's nothing more frustrating than an amazing drill hole, but on the side of a mountain next door to a glacier or something like that. Well, that doesn't really do anyone any favors. It's environmentally, it's a crazy idea. I mean, I visited the Kumtor mine in Kyrgyzstan where they were moving ice every day faster than they were moving ore just to keep up with it. So just like understanding all those aspects. And it was a great opportunity working with the team there, and they've still been very successful. And so then, that was 13 years of traveling fund management and really understanding investment side. And we were one of the most successful gold funds in the sector for many years. And then then I was approached by a couple of the shareholders to join Rupert Resources, and it was just a great opportunity. I'd been there to look at it. I wasn't that excited about the part of our mine that we the company bought, I'll be honest, but ultimately I was excited about the exploration potential. It was unexplored territory in an area that hadn't really been touched commercially with exploration. I mean that in a nice possible way, because Finland joined the EU and there was a lot of state-sponsored exploration before that. But in terms of the sort of money that goes into commercial exploration, even the money that we were committing to it, we been committing $15 million a year just to drilling in the last couple of years, $15 to $20 million of drilling. It's only through that you really make the significant discovery. So it was a great place in the world to do it. It's a lovely place to work. The people are great, and and it's very safe as well, which makes it a lot easier to operate. So so there you go. That's a bit of a background history to me.
And then just touching briefly on your financial position, I mean, you raised this February. What does the treasury look like currently?
Yeah, we came out of that financing, and at the end of February this year was 70.6 million Canadian in the treasury. So today we get today we'd have in the order of about $60 million in the treasury. We're spending money in the order of about 3 million Canadian dollars a month. So the company's well funded through this time next year anyway. So I think it's just a case of, and the big delta on expenditure right now as a company is how many meters you drill. So currently we have a base exploration business that we keep to effectively 5 million euros, so about 7.5 million Canadian dollars. That's the money that finds the new deposits ultimately. And then you've got all the other drilling that needs to be done once you follow up on things, etc. So it's a significant part of what we're doing still.
Yeah, so about the next potential financing, you said this budget will last you at least a year and quite intense drilling throughout this period. When do you expect the next financing to take place, and how sizable do you think it will be approximately?
I think we won't consider financings unless there's some sort of opportunistic situation that arises until at least the second quarter of next year. We really obviously we're set up now to focus on doing the PFS, getting this resource update out, and working on environmental work, and we're well funded to do all that. So obviously, we this business sometimes you have to make it is about the timing of doing those. So you can never commit to when you'll need it, but certainly the money is the company is would still be in a very strong financial position this time next year, which gives us a lot of flexibility to choose when's the appropriate time to do that. So I mean, look, ideally the PFS work goes a bit quicker. Touch wood. I'm not sure that often doesn't happen like that, but we're quite well advanced that now, and we start to get a sense of things, and maybe we can get some more, demonstrate how good the project is and get maybe that funding is, as I said, sometime in the first half of next year. Precisely, I couldn't tell you, but not in the near term anyway.
We shouldn't expect this current treasury to be able to take the companies to say feasibility stage. You would need to finance before that.
Absolutely, yeah. Look, it's a relatively expensive process going through this, and we obviously, if we stop doing any drilling, that would be the thing. But obviously, and that would be the thing that it's hard to. We'd probably never stop doing our exploration drilling because that's what changes the potential price that you do future financings at. Otherwise, you've lost any growth. Look, I think we would need to raise probably the same again in terms of funding to see the company through all the permitting stages and the feasibility study. Yeah.
And then, I mean, in the recent financing, Agnico Eagle made an investment into the company. It would be very interesting to hear about their involvement in the business on an ongoing basis. What is their intentions with the investment?
Yeah, look, I think they've been involved since. Luckily, they got involved just before we made the Ikkari discovery. So we've been talking to them for quite a long time before that about becoming a strategic investor and being involved. So their timing was fortuitous. They are involved. We keep them up to date on a quarterly basis. They're not actually involved in any of the work that we do in terms of planning it or anything, or any of how we go about our business. But they're obviously they're a 15% investor now, and so they're kept in touch as a 15% investor. So yes, they participated in every funding round since that, and they've exercised their warrants. Forced exercise earlier of their warrants anyway. So that gives them their position at 14.9% of the company. So I guess probably more importantly for us was that all the other money we raised in the financing through institutions and other long-term shareholders of the company. Yeah, they're and obviously they have a significant business in Finland still with the Ikkari operation.
So, I mean, in terms of the other shareholders, who are the other major institutional shareholders, and how much does the management and board hold combined of the company?
So management and board holds in the order of about 3%. It's not that high ultimately because obviously I came in quite late into the life of the project. I have a 1% stake in the project, but in the company. But we still have meaningful shareholding obviously in the company. In terms of other shareholders, it's a mix of institutional. So you've got, if you go through the Bloomberg register, there's some significant institutions on there. BlackRock out of the UK, plus a lot of the usual suspects that I expect out of Canada that have been supporting the company of long-term investors. There have been people like that have been in the sector for quite a long time. So I think there's a list of quality institutions. Again, they all came on relatively late. There's a significant shareholding in Rupert, which is still owned by ultra high net worth family office type money as long-term investors, and that really drives the low liquidity in the stock because they've been in the beginning. They're quite happy to sit and hold it and enjoy having this exposure to this great deposit, and it's a more of a long-term asset allocation. And so that's probably typifies a lot of our shareholders.
And you said that you own 1% of the company, which is that's fairly good, especially for the size of this company. But how much of your personal net worth would you say is invested in the business?
Most of it. Well, the long-term outcome of my net worth is invested in it for sure. Yeah. So I transferred my ownership of when I left Baker Steel, I basically did a transfer of things into shares of Rupert Resources. So that was transferred across my exposure from Baker Steel into Rupert. So enough to care, trust me.
Yeah, it's reassuring to hear. It's not always the case, as you know, as analyzing many of these companies.
Yeah, absolutely. I think that's having been on your side for a long time, that's often the case. Yeah, absolutely.
But more broadly, of course, you're motivated on a share price appreciation level. But how do you ensure that the the geologists and the broader management are motivated to drive the share value of Rupert.
Yeah, so everyone in the company right now, it's a small enough company for everyone to have share options, and actually everyone to have performance share units as well. So share options, well, they're the way people get share options, and the way a big trigger for our share options is actually return on shareholders' capital every year. So obviously we raise money, we spend it. If it's not recognized by the market, we don't get many share options distributed to the team, because obviously that, yes, you can, over the long term, yes, there's going to be some years that you just can't control it. It's a bad year in the market and all shares of gold companies fall. But reality is, over the longer term, if you are continuing to add value to the business, you expect it to be recognized. And, we as a team, as the management and all team, have to basically have that same journey as everyone else, as the investors. So one way to do that is to say, okay, well, what is the return that, if you raise $20 million, did you actually, what you added to the shareholders' equity balance sheet, did you manage to, increase the market capitalization by twice that, or 3 times, or 4 times that? And that's absolute key measure. There's obviously an relative outperformance of the GDXJ as well, which is another metric we use. But that's a portion of the long-term plan. But the other portion, which is performance share units, is in terms of the milestones. So achieving the PFS, achieving the environmental impact assessment. So, and those are throughout the company. So everyone wears that. We have a milestone for discovery, effectively. So if we make another significant discovery, people get share units in the company distributed to them. So I think, that's the thing. And then on the management team level, we have more of a standard KPI-based approach to our REM, which, we pay moderate salaries, but the REM is based, a lot of the REM is based on meeting the health and safety, environment, social KPIs in terms of financial performance of the company, delivering on budget, etc. But then delivering on the milestones. Have we achieved? Did we achieve the resources? Did we set out? We hope to achieve 4 million ounces in reserves. Did we achieve that in that period? So and that gets reviewed every year. And so I feel as though people, there's a lot of ownership in Rupert, and there's a lot of my approach to managing the company is that we give people a huge amount of autonomy as well. And by doing that, we've been able to attract some really, really good people in the senior management level to join Rupert Resources in Finland. It gives them it's their project ultimately.
One thing that strikes me as potential for Rupert, since you have been very successful at appreciating your market cap. There's many gold companies that has a PEA out that's trading at $30 million, that has multiple million ounce discoveries. But of course, you're very high quality, but still you've done a very good job there. So with this size in mind, I see that there could be potential for you to be a sort of consolidator in Finland more broadly, if you would like to, but mostly in the region. Is that something that you're exploring or considering actively?
I think as a non-cash flow generating company, we have to be careful that we don't just consolidate to be bigger and then have to raise more money and put more stress on balance sheet and need to issue more shares. So I think we haven't consolidated in the region. We've done some joint ventures on some land that we like. We actually believe that most land that we like will come back to us. You can't just sit on land forever in Finland. It cycles through. And if you can't afford to spend the money, which a lot of juniors can't, it comes through anyway. So if you're a well-funded company in our position, we are prepared to be patient on land. So we won't just say, obviously, if someone made a significant discovery, we might think twice about that, but no one else has yet. So it's just a case of being aware and open to that. I guess the obvious thing, really, and I think I got asked this in a previous interview about, would you change your strategy just because of the changing dynamic around you, the market, etc., or the gold market, or people saying, okay, you should become a producer now. But ultimately, it sort of goes back to the base thing. We will look at opportunities, but it's all assessed on the quality of that opportunity. There's no point us consolidating an average business and diluting the quality that we have in the business today, because ultimately the thing that I take away as an investor in the company is that you can't take away Ikkari anymore. It's been discovered, and it's one of the most highest quality discoveries that have been made in many years. So you have to be careful what you match up with that ultimately. I think consolidation or mergers with other companies that might be in production have strong cash flow and de-risks the opportunity for Rupert investors going forward. Now that's quite interesting. But just buying small stuff, I'm not sure about them.
And in terms of land, are you actively? I mean, I assume there's not too much land to stake actually anymore in this region. Most is gobbled up.
Yeah, we just have a long-term approach. We select land that we like, regardless of who owns it. There's a lot of reservations coming due this year, and they're going to cycle through. So we've sort of pre-selected on a bigger scale areas that we want to internally, and we'll just keep an eye on that. And if bits of it come up, we'll pick it up. As people drop it, that's the best way to do it in Finland, really. There has been a bit of a land grab, but again, it comes back to it's a tough market for juniors right now to raise money, and land holding costs are 20 euros a hectare. So our land holding cost is in the order of 1.5 million Canadian dollars a year. So if you're only raising $3 million a year, you've blown it all on land holding costs before you've even put jewelry on the ground, and before you pay for the G&A, before you don't. So you achieve nothing. So yeah, so hence why stuff comes up again. Yeah.
The Finnish kind of minerals and mining space, are you seeing a lot of new entries and interest? From you have some established larger companies, but are new large? Are you getting those phone calls? Of course, you have Agnico already, but are you getting approached, or are you kind of reserved now with Agnico, I assume?
No, absolutely not. I don't know. Yeah, Agnico said Agnico's there, but if you think of the other operators in the area, our neighbours are B2 Gold. They're a significant operator. You have Kinross still operating in the country. You've got Newmont as a quasi shareholder through Orion. And that's just in the gold space. Step away from there, then you've got Rio Tinto taking large tracts of land next door to us in Stankler. You've got all the majors back in the country. First Quantum's come back into the country. BHP has joint ventures with juniors looking for nickel project. Yeah, it's like 2017. There was no one. We went to, there was a couple. Orion had been there before, but really there was very few people there. But now it's very busy, and obviously we have a lot of people come to see our project from gold companies all over the world because they're intrigued to see what the opportunity is. So yeah, I guess we do have quite a lot of interest in short.
Land package. I mean, you guys are pretty close to established nickel and base metals projects, and so that's something that Rupert could explore for as well. It's not exclusively a gold company.
No, absolutely not. We've done quite a lot of, when I guess to be clear, the exploration strategy isn't necessarily to find gold projects. It's to find high margin assets that can be mines of the future. So be they nickel, copper, I guess reality, if you're going to look at the suite of metals that's most geologically most relevant for the licenses we hold, it's probably copper, nickel, and gold. Maybe some PGMs, but mostly copper and nickel. And obviously you've got the Sakati discovery from Anglo American. It's one of the most significant discoveries of the last 20, 30 years in that space. Copper, nickel, PGEs, that's basically 5% copper equivalent deposit. That's a pretty exceptional deposit. So geologically, absolutely the region has potential for these. And again, it comes back to why wasn't Ikkari discovered, or why wasn't Sakati discovery? We used a very similar method to those guys, similar actual geophysicists, similar people behind it, and targeting methodology to do that. So it's not, it's about, again, the issue with exploration, the frustrating part for most investors is the time it takes, and getting through those process, testing new targets, doing that. But yeah, it's I'm sure Kalle will talk about that. But yeah, it's a great area of the world for that.
And in terms of Finland as a mining jurisdiction, with permitting time and all of these things, is your feeling that things are heading in the right direction? Are things improving in Finland? What's the general takeaways there?
I think it's in it. It has a very good system of that you can go through, and actually quite a strong time system. So when you put in applications, they have to be processed in a certain time frame. Now that doesn't mean that they'll approve the permit, etc., etc. But and you obviously have, it's a very public process. You have the potential for appeals. It's very democratic, but there is a very well laid out system that you go through, so which puts you in a much better position to other countries where it's very uncertain and you're not sure about change. So I don't expect there to be major change. There are some changes coming to the mining law, and I think there's going to be maybe a royalty put in place. There isn't any government royalty. It's currently just a corporation tax of 20%. So it's a great environment right now corporately, but that's been recognised that they want to increase the tax take, or the government take from mining. So look, expect to see some royalties come into the system, but in a system where you don't have any royalties right now, apart from a tiny landowner royalty, it's not. Again, if you've got quality projects, it's not going to impact the bottom line too much. But and it ultimately should be done. So I think it's a good environment. It's a very transparent environment to work in. I think it's comparable to Canada, I guess. Maybe we have a quite, if there are appeals to your project, there's an established court process to go through that. That could take a bit of time, but that's just due to the load on courts, isn't it, anywhere in the world? So you just have to, if it's important enough to get it pushed through, you'll get it pushed through.
And just what is your expectation on the royalty? Will you have like a 5% NSR royalty, or what?
Oh no, I think it's like currently there was talk last year that it's going to be 0.6, so it's not not a big step change. I think there's some recent talk that it might be through 1% for gold, but no, we're not 5%. It's currently 0.15% to the landowners, and so we put in our PEA a 0.6% expectation. So yes, it might go to 1%, but to be clear, we have no other royalties on the project anyway. There's no overriding royalties to previous holders, so it's a very clean project in the first one.
Now, for the second segment, we're going to drill into Rupert's exploration strategy in the wider licenses, their potential in Area 1, which is in satellite range to Ikkari, and then we're going to take a look at the extension potential at Ikkari itself. We will also learn more about their exploration methodology. How are the drill meters currently being split across your targets? What's the plan in terms of drilling, say, for the next 12 months?
Yeah, so we have to do some more infill. I think we're in the order of 50,000 meters currently in the plan. I'm sure he'll go into a bit more detail, but a significant, about 50% of that may well be allocated to doing more infill at Ikkari, just to take because if we get into the DFS stage, you want to move a certain portion to the measured category because you start thinking about debt finance, things like that, to give the banks a lot of comfort. You want to have that there, and the rest of it's on exploration. So an exploration, I'll say to Kalle, is we'll allocate more meters if you make a discovery. So there's a base amount, but let's the way we try to allocate small amounts of meters to each target, reassess them. Is it worth allocating more? And then just be systematic about it. But then if you get onto another Ikkari or a deposit that's significant, for sure you're going to have more meters. And I think there's the investors and everyone involved in the company would want to do that. So I certainly would. Yeah.
You have quite a lot of opportunities, a lot of targets to find. So are you planning to kind of maybe hire a bit more people so you're able to manage effectively multiple targets that's getting more advanced simultaneously?
Yeah, we'll recruit a bit more into the geology team this winter, but again, we're not rushing through them. So when the difference is, you might go and do 1,500 meters on the target, but then we've got to wait for the results to come back and assess that. Then if we think it's any good, do some network, have a bit of before you then go and allocate. It's a bit like investments, really. It's the exploration side is like the most speculative investment consideration you could ever think. So you're not going to go all in on day one. You're going to say, okay, well, I'll take, let's say, as a percentage of your portfolio, I might invest maybe a 0.5% position in it to begin with. Once to get a sense, build up, meet the management, get a bit of trust in it. Okay, do a bit more work. Okay, it's beginning to show quite good. Obviously, you want an allocation just in case it goes straight up through the roof on the next hole for exploration and becomes a phenomenal discovery. It's nothing quite quick. But you basically want to step into it systematically, because the difference between investing in stocks and investing in exploration meters is that so often in stocks they might go wrong, but you can get back some of the money. But if it's once you've drilled the hole and money's been spent, you've given it to the contractor, there's nothing left. So you've got to take risk, and I absolutely and I encourage our guys to take risks, because that's really why the exploration business is all about risk management and taking risks and leading about. But ultimately, the difference here is that you've got to be, if you spent $5 million and all you've drilled is 500,000 ounces, well, or a couple 100,000 ounces, I'm not sure whether that was the smartest move. Well, it wasn't the smartest move. It was stupid, because you probably knew it after you drilled the first 3 or 4 holes that it was never going to be something really significant. So, when Ikkari is an operation, is generating lots of cash flow and everything, then you can go and allocate money to just find those extra 200,000 ounces here or 200,000 ounces there, the incrementals. But that's not where I see a company like ours should be spending money now. It's not going to, that isn't going to change the delta, isn't going to affect the valuation at which you have to raise money to get into production. And if you keep on diluting the shareholders now, you'll end up with so many shares out by the time you get into production that your business is. How can you ever show a return on shareholders' equity if you run a business like that? If you don't do that, you kind of lost the concept of being a business in it. You've got to. I think it's an R&D business, ultimately exploration. So you've got to keep on investing in R&D, but it's got to be in a managed way.
Two important parameters we always like to know, what kind of lab assaying time are you guys dealing with?
Our turnaround time's like 4 to 6 weeks, so that's a big control on this industry. We're currently working with a group. Let's see what happens in this industry in the next few years. There's a lot more scanning of core going on. Let's see where that goes. That could be transformational for this industry, because the biggest problem for exploration companies is having to wait 6 weeks. You drill the hole and wait 6 weeks for the asset. If that was an investment decision, you'd be, it's crazy, isn't it? I'm just going to allocate $500,000 to this stock, and I won't look at it again for 6 weeks. I mean, that's great. What if a lot can happen? It's managing that process. So that's why we don't drill a lot of meters really fast, because it's like you taking on the largest possible position in the portfolio and then just ignoring it for 6 weeks and then hoping, then not knowing the outcome of whether it be a good investment or not for 6 weeks, and the money's gone. So I think, it's an interesting dynamic.
Does the RF, guns work well with your type of mineralization and metallurgy? I mean, do they kind of accurately give you information, or is it?
I mean, you can't pick up gold with an RF gun. You can see it, but you can pick up the alteration and things like that, so it's useful. But they are often. A few years ago, I was asked to go on a panel about AI and all this sort of stuff, and as it transformed the industry. The best thing, our ability to manage the data and be able to look at the data is what's changed, but you still need the geological thought process to actually understand the data and make your next decision. You can't really substitute that in for a computing technology or just using one piece of data. You still need thinking time. So the best thing we can do as an industry is to speed up the time it takes to get the data. So from drilling the hole to getting as much data out of that hole, if we can reduce that time down to 2 weeks or something, now that will transform exploration. That will make a big change. But just getting more data doesn't really help.
Is there any work on, is there any potential for that time to be improved? Is there any new labs that are being worked on?
Yeah, well, we work with 3 different labs to try and manage the time frame, but results from our assay turnaround to get them as quick as possible. Said we're exploring, it's very early days, this whole core scanning technology where you could effectively get instantaneous. Imagine if you had that equipment on site, you might be able to get pretty much instantaneous, but you got to process the core. But within a week, you could have chemical information about the core, which would be pretty impressive. But yeah, that's in its infancy, really.
the the all-in kind of cost drill per meter? Of course, this varies if it's exploration, if it's how deep, and if it's infill. But nevertheless,
it's pretty competitive in Finland. We currently cost us about our average. The drilling costs in the order of 120 euros a meter, so call that 160 Canadian, and the asset costs are in the order of including everything, it's like 40 euros. So, but we don't just assay for gold, we assay for everything, multi-element assay. So just doing gold assays, they're like 20 euros, but including all the processing. But yeah, so I guess I hear other people talking about $200 or $300 or $400 a meter in terms of drilling and assay costs in other parts of the world right now. So it's a very competitive part of the world to explore.
And then just from your point of view, I mean, where are you focusing on allocating your capital now to to kind of find the next major discovery in your land packages? Which area do you think is most prospective to that?
Well, Area 1 is still Area 1 for a reason. And when you discover a system that delivers deposits like Ikkari, we're still very encouraged that we have not got anywhere near, unlocking or demonstrating all the potential that could be there. And then, look, Kotiaho is an exciting new permit to work on. Obviously, it's new, it's brand new. It's like 29 to me. It's like me trying to sell investors on the original story. I remember going around telling people about we're going to explore in this region, like 15 k's away from the mine, and people are like, oh, yeah, really interesting. I don't really want to be part of that science experiment. I've seen it too many times before. But look, that's what we've got to do, and that's an interesting region to go and explore. So I'm excited for the team to be able to get in there this winter. And see what we can do there as well. So, but still, as I said on that map, Area 1 is but 5 kilometers of 20 kilometers of the strike of the original structure we're exploring. So we're just like on our 4th or 5th iteration of the structural interpretation of the belt. Obviously, we've done a lot more. On the first one, we had no drilling, and now we're, maybe there's 150,000 meters of drilling that we've done in the belt over the last 5 years, and so we feed that into the model and try and understand it better. So we get better and better at identifying where to go next, just even that belt. So look, I think there's plenty to be pretty excited about on the exploration side.
Looking at Ikkari, you have the potential extension to the west and at depth. So when do you plan to essentially, when do you plan to have this tested and announced? When do you plan to know what kind of extensions you're dealing with here?
Oh, well, we already have, we have assays that we're still waiting on for the western extensions work at the moment, or a couple of those, and some of the deep holes. We still had a drill rig there up until 2 days ago, drilling deep holes at Ikkari. So obviously the results from all that, so 4 to 6 weeks pending from here. But I guess that will give people a better idea. And then ultimately, once the slight issue we have at Ikkari is that it's much easier to drill that deposit in the winter when you're sitting on snow and the ground's frozen. So there's only so much we'll get done before then. So much we can do in the summer, but look, there's still quite a lot of assays in the system that are going to come through over the summer. And so that'll keep things topped up, and then we'll start to build up the drill rigs again come September, October, November, December, and then get back into the full cycle of doing that next winter. So I hopefully we'll be able to give the market a bit more of a sense on those western extensions pretty shortly.
Hello, I'm Kalle Pekka Kotiaho, and I'm the exploration manager of Rupert Resources. Came to the company 5 years ago, approximately, and been with the Ikkari discovery from day one, and in various roles, but now as an exploration manager.
Could you kind of tell us about the the story of finding Ikkari?
Oh yes, I can. So, well, the story of finding Ikkari, we started off actually way back in 2018 already. We started doing field mapping and boulder mapping, and some initial basal till sampling near the Pahtavaara mine. But during winter 2018-2019, we switched our focus to more regional exploration at the Rupert Lapland project, and then we went for this area called Area 1, which was highlighted by us like to be geologically very interesting. We did some interps from geophysics, magnetic maps, and gravity, and of course from previous historic data. So we kind of have had this area highlighted, which we call Area 1 now. So that's where we focused our exploration efforts in 2019 winter, and we started already back then getting some good base of till anomalies, which led then through some scout drilling in 2019. We just drilled 4 holes, and all of them basically we hit gold. So that's when we found first anomalies drilled was Heina South and Heina North. Heina Central was the third one, and since the area is low lying and swampy, we had to pause our base of till for a while for the summer, and then we continued the next winter with more base of till and more drilling, and that's when we eventually, following up this base of till drilling, we eventually found Ikkari, which actually was our 6th discovery in the area. So we had found five different gold occurrences before we actually drilled into Ikkari.
Yeah. So how has your understanding and tactic of hunting for gold in the area changed since then? Of course, you've learned a lot more of how to target gold, and how's that evolved?
Yeah, I mean we've learned a lot, and now that we actually know what proper mineralization looks like, we know the geology much better. We have much more technical expertise of the area and what to look for actually, and what methods to use. This base of till method we've been using now quite a lot is we've noticed that it's definitely the most effective way. Maybe not the fastest, so these things take a bit of time to find, but it's really effective exploration wise. It's a really good tool.
Can you explain how that method works for everyone? So
yeah, so base of till sampling, I mean, this area in Lapland is covered with glacial till, so we've had several glaciations over in this area, in this region. So and since we are in this kind of ice division area, which means that the till might have been layered, so we might have 4 different glaciations, and we don't know really what way the ice flow direction really is on each till layer. So the idea is just to punch through all of those till layers to the base of till or top of bedrock and sample the last 30 centimeters of till, and also get a piece of bedrock, like a chip from the bedrock, and then assay that for gold, multi-element, log it with a microscope, because we're getting a rock chip from the bedrock actually. So that's so we can get some lithological context and then geochemical context, and that's the way to go with the sampling.
So these models, kind of using Ikkari as a blueprint, has been useful for target generation for you now recently.
It has, yes, but then again, we're not necessarily, because all deposits are not the same. We're not necessarily looking for only the next Ikkari. We're looking for the next 2 million, 1 million ounces. So that's what we're looking for. It might look completely different to Ikkari. That's fine with me if there's just enough grade and tons. So, but yes, in this region where we're working at the moment, we have used Ikkari as a blueprint, and also the other occurrences that we have found, because they are slightly different to Ikkari again. So we're using all of the data we have compiled over the past years, doing quite significant amounts of exploration in the area, and then using that in the future in our future exploration activities.
So just to give everyone a sense of the region that you're working in terms of seasonality and exploration activity, what does that look like for you guys?
Well, we do have different exploration seasons. Of course, we have, well, the winter season is of course the most active season for us over here, because then we have access all over, all the swamps freeze. We don't have to this kind of wet and soft ground doesn't matter that much, because then we can just drive the rigs on the swamps and drill. So that's definitely more active during winter. But we do have targets also that we can drill during summer. So it's never stopping, but it might be just a bit more intense during winter.
And I mean, of course, Ikkari is of course very unique. It's the morphology is beautiful with the deposit, very mineable. But I'm thinking, from my understanding, the high grade material, of course, everything is fairly high grade, but the higher grade sprinkles is it's fairly distributed throughout the deposit. Is that correct?
Yes, I mean there isn't really any very big variation in the grade in Ikkari. I mean it's very evenly spread out. I mean, sure, there are some areas with bit lower grade, and some areas with bit higher grade, but I wouldn't say that there's some sort of like this distinct zone where there's higher grade or lower grade.
So my question is, when you start to infill drill more as you advance towards PFS and feasibility study, do you think that the average grade could increase as you kind of hit more or kind of understand it better? Do you think that's the likely scenario, or do you think it will come down the average?
I don't think it will. I think it will stay pretty much the same, at least the same. We haven't had any surprises with the deposit. It's a kind of a freak in that way that it's it's kind of solid grade all around. There's haven't had any surprises grade wise that it would go down or up. So it's kind of solid around the 2.5 is where it is at the moment.
Yeah. So in the kind of open pitable satellite range around Ikkari, could you kind of outline what targets you have there and what your hopes are for the region, the local region to Ikkari?
Yeah, well, the satellite deposits in area 1. So area 1 is this. It's 3 by 5 kilometers. This area of focus for us. So that's where we found five other satellite occurrences. So we have Heine South, Ikkari North, Heine Central, Heine North, Island North, and Saita. And to be honest, we have drilled them, yes, but our main focus has been for the past years Ikkari. Like we've been putting most of our drilling budget into Ikkari, so those deposits are fairly undrilled. Only Heine Central has an inferred resource, for example, but they're still a work in progress. We're still doing exploration work on them, trying to delineate the mineralization and find out where we have the edges and see how much we have in these areas. But it's not stopping, and we're using these geophysics to target possibly some deeper mineralization that we can't target with basal till. And in general in area 1, I mean it's most of our drilling is to -150, -200 vertical, and in Ikkari we still have mineralization at -650 or around there. So there's still a lot of depth potential in the area. So we haven't drilled that deep in area 1.
Is there any target in particular that you are excited about in the regional to Ikkari?
Well, I'm quite excited now of Ikkari North, which is approximately 800 meters, 1 kilometer north of Ikkari, which we actually found using geophysics a year ago, and we've continued exploration work over there for the past year now in the springtime. So as I said, so basically at the end of drilling season, because we had that project work earlier in the season, but that one is looking pretty good. And of course the entire trend, because we have this huge magnetic trend heading from area 1 towards Rajala Village, which is 20 kilometers. So that's relatively underexplored still. So that has the same lithological package, same structure as we have in area 1 as in Ikkari. And we have done work on it, but there's still loads and loads to do over there.
So if we kind of zoom out to your larger land package, your licenses, do you see, I mean, any promising targets that has the footprint to potentially define another Ikkari or something like that, a bit larger potential, not satellite pit style? Or
it's pretty hard to say in that sense that do we have another Ikkari, but there is certainly potential for multi-million ounce mineralization for gold, but then we also have lots of base metals potential in our permit package as well in the eastern part. So it's not sure gold is our main game, but of course if we have a base metals target, if we see a base metals target, we'll test it as well. But yeah, it's pretty difficult to say do we have another Ikkari, but we definitely do have the same rocks which have the potential to have the same to have another Ikkari in our permit package.
and in terms of activity in the eastern license, what does that look like? Because of course that's earlier stage. How many meters are you planning to drill there, and how many defined targets do you have?
Well, first off, our process works in the way that we first start by doing base of till, and then we assay for base of till, and if base of till is looking positive still, and then we start thinking about the meters that we're drilling. So now we have we've done base of till, these initial scout base of till lines we've done for almost all of our permits, but there's still some areas to do, and the assays are actually still pending. And then we go off and diamond drill it if we find anything interesting. And the good thing with our company is that we don't really, in that sense, we don't have to book a rig to do an exploration program, because we have drill rigs working in Ikkari all the time. So if we find a target, some very good exploration target, we can just borrow one rig from Ikkari and go drill that exploration target anytime, basically. So that's how it works.
So you would estimate now you don't have any drillable targets in the eastern kind of part of the license.
Oh yes, we do have drillable targets. I'd say 1 to 4 targets coming, but we have a long list of targets that we have ranked, which have the priority to be drilled first. So we do have targets, yeah.
And when we're talking about base metals, do you see any other metals like mineralization? Do you see zinc and lead being involved or anything like that? Or I know that you have nickel platinum type deposit quite close there as well.
No, not really zinc and lead, but mostly nickel, copper, and possibly PGs. But nickel and copper are the kind of main focus of if thinking about base metals for Rupert. But as I said, gold is our main game.
3 years from now, you looking back, what would you have liked to achieve as the exploration manager at Rupert?
Just find another Ikkari or something similar. First of all, we need to advance Ikkari and make it bigger and make it happen in a timely fashion and well. But then of course we want our exploration to succeed and do the same thing and start it all over again, find some more. That's our target all the time.
In the final segment, we focus in on the main development milestones that remain before an eventual construction decision can be made for Ikkari. But more importantly, we will learn how James thinks about these remaining steps strategically for Rupert. Let's just dig into the timeline here on Ikkari a bit more. You showcased that in the presentation, but I just want to clarify everything for everyone until construction. So, of course, first you have the PFS. When do you expect the PFS to be completed more precisely?
We hope to have the filed copy by the end of the second quarter next year. So we'll have a copy in the first quarter, and we'll be reviewing it in the first quarter of next year, and we'll release it as soon as we can.
Could you kind of outline if there will be any more significant changes, to the mine plan, capex, opex? Is there anything?
Look, I expect the mine plan will be re-optimized again. We'll probably look at long hole open stoping again rather than sub-level caving. That will increase the grade if we do that in the underground. that'll change that. In terms of the scale, I would say it's going to, there's no reason why we change the scale of the operation. And I think we might tweak that a little bit. Metallurgy processing might change a little bit on the back end. There's a grind size, things like that. But obviously they will have a marginal impact on cost. CapEx, well, we're in an inflationary environment, so I'm sure there'll be some, I think, let's be realistic, there's going to be some inflation relative to, we did those based on Q1, Q2 2022 numbers, so like you can't avoid the fact that things have got a bit more expensive, and obviously, but then again, what gold price will we use in the PFS? That's the other side to that. Obviously, inflation should be directly linked to the gold price. Well, it is. So you're going to the consensus gold price has moved up by $50 since we did that, and that's only 6 months in. So the consensus gold price might be at $1,750 by the time we get to next year. So, so obviously that will then, you can't only focus on inflation factors. You got to focus on the revenue as well. So I think that's the other side to it. So there'll be changes. It won't be the same numbers that we put out last November. They're quite old now, but at the moment we don't see anything like that. We go, oh yeah, that's a huge problem on that side. Incrementally things will change, but in terms of the aim overall is to just deliver a more optimized version of what we did last time. To be clear, it won't include the part of our operation. It's just going to be the Ikkari deposit. Yeah, it's not going to have any satellite. No, it's just the Ikkari deposit at this point for the PFS, because, as you said, it's about moving it forward to the permitting phase, and that's the real driver of value right now. So that's the focus. All the other, other ounces they only get into the system if they can economically generate a better return after everything than other ounces. So let's say rank them.
I mean, so post PFS, you can commence with the EIA. When do you expect that to be concluded and approved?
Well, the idea is to submit the EIA. We're going through the EIA program phase at the moment. We'll have comments back from the authorities in August of this year. That may lead to some changes in the way we conduct the EIA program, which is the data collection through to the assessment collection through to writing the EIA document. But our plan is to be in a position that we do have an EIA document completed next year and submitted. And that EIA document then gets reviewed to see whether it's got sufficient information. It covers all given the operating scenarios that we're presenting, which you present 3 different operating scenarios in an EIA in Finland. That will be assessed to whether you've evaluated enough information for that, and then ultimately, if you have, then you can make a permit application based on one of the scenarios that you've demonstrated in the EIA. So again, timeline-wise, we would like to be in a position to be making that permit application in 2025, and then subject to any appeals. Well, obviously, presuming that permit is then granted, and subject to any appeals on that basis, then that does lead you into a timeline of this 2028 potentially in production as our best case scenario.
Between the submission of the permit and the granting of the EIA, you have the feasibility study, presumably.
Yeah. So the reality is, if you think the PFS will be happening this year, to make your permit application, you'll have needed to complete your DFS. So that'll be sometime in early 2025 that you complete the definitive feasibility study, because that will define what your permit application is for. Because you'll have chosen a route, you'll have chosen the best path to develop the project, which you will do all the detailed work.
But for the feasibility, you certainly, if you have a significant extension to the west that's fairly close to surface, you would infill drill that out, so you could include that into the feasibility.
Yeah, like the shallow western extension goes like northwest from the current pit. Though we've been drilling a bit of an extension there. That'll push the pit up again to the northwest. Currently, it sort of cut off there, but it'll probably step out to that side. I've also got the boundary issue that we hope to resolve over time, but that may well take it. But the western extension material is probably underground anyway. The ones that I referred to in when I was talking about, that's probably underground anyway. You're at like 300 meters underground there, so why would you do an open pit for that? It's That would extend the underground. So yeah, yeah, that's probably a better way to think about it. And that's, doing that work now is just, again, making sure you don't put any infrastructure there in the wrong place. It's about, okay, well, it's going to extend up there. How should we think about that in the future?
In terms of satellite potential to the Ikkari mill, do you see that, not for the PFS obviously, but for the feasibility, that there's potential for a satellite pit to have been sufficiently delineated and drilled for it to be included into the kind of mine life in a feasibility study?
Yeah, absolutely. There could well be some other deposits that are factored into the DFS for sure. But remember, they got to be reserves, so yeah, there can't be inferred resources. So you have to be that really just depends on how much we want. Again, goes to that point: how much do you allocate drilling time to that now versus other discoveries? So because the DFS, well, I don't know how many mining projects I've invested in, but trust me, none of them look like the DFS a year later. So it was, and none of them look like. And I have to ask companies once they get into production, if you ever reconcile back to your DFS, and they go, no. There's like a point in time, because often those are done 2 or 3 years before it gets built. So in that intervening time, when they're going through finance and construction, they're still exploring. And then when you go and visit the project, it's a reference point. It's a snapshot in time. And I guess sort of my message to investors is that you just follow the path all the way through. Because if you get too locked into those milestones, you miss. It's about follow what we do on the exploration, new ideas that will come out. We'll try and keep the market up to date with those. And whether they're included in a study or not, we'll only be drilling them if we think it's worthwhile. So if we think there could be something better in the future.
Yeah, I mean, that's certainly true, but choices needs to be made because, the permitting is based on these studies.
And that's why you have to constrain things for those studies go through the permitting. And obviously in our public disclosure, in our EIA, we will talk about all the satellites and all the potential. The difference is whether you can talk about those in an economic manner because you've done enough work to declare that in an economic manner. But in our environmental impact work, one of the reasons for doing the exploration now is that we refer to all those in the environmental impact assessment and the sizing, the operation, and the scale of where things are, because that means that it's not that they can be incorporated into that overall permitting decision about what the future operation would look like. Because you have to present in your permit the whole life cycle of the operation, which you don't have to do in a DFS.
And what kind of throughput do you think you will be permitting for, since you have a lot of potential to potentially expand that?
Currently, public documents we've said 4 million tons per annum. Yeah. So that means you can operate any scenario up to 4 million tons per annum. Yeah.
And that's that's locked in. That's what we're going for. That's going to be the.
That is at the moment. We still have the opportunity to revise that because we're just in the EIA program phase. So if there's something that comes up this year that says that we should make that larger or smaller for that matter, but we'll probably not make it smaller because it's a limiting factor on any future throughput, unless you redo the EIA. So no, 4 million ton is a number that we feel relatively comfortable with as being a good, given the morphology of everything, we think how quickly you can get them out of the ground, we think that's a reasonable number.
Where do you see Rupert Resources in 3 years from now? Where will Ikkari be at? Where will your other exploration hopefully be at? What would you have liked to achieve then in 3 years from now?
In 3 years from now, we'd expect to be sitting there, in that, where I guess we're 2023. Ideally, we'll have extended the size and scope of the Ikkari deposit and shown that it's going to have a much longer life over time there, but also through its satellites that it will have shown through continued exploration that, yes, we have a feasibility study life of 20 years, but ultimately it's probably going to be there, but sort of demonstrate that the potential for it to be there for much longer than that, and actually demonstrate some of that geological. And then on the permitting side, we'd like to be sitting there with our permit application in and having some positive discussions with the permitting authorities about about what the next steps. We also have a lot of other permits to do, land use planning, municipality permits, all the mining permit side of things. So it's a much broader element than that, but the environmental permit application does tend to lead on to a lot of these other things getting done. So, we want to be, starting to them about, I guess, talking about financing the project and ultimately, the details of that path to production at that point in time.